My friends, my family, thank you again for tuning in. We have just crossed 80 subscribers, and on this video, I'm going to go over dividends. Why you need to do dividends, why are they the most passive investing strategy in the world, and I'm actually going to expose my dividend portfolio as well. So stay on tuned, guys, and let's get right into it. Thank you. Now, I'm going to give a quick overload on dividends, what they are, how they work. So dividends are just cash. Companies like Coca-Cola or Apple pay you for owning a portion of their stock. Just like that, it's zero work. ETFs such as SCHD will give you a certain yield on the portion of the amount of stock you own. So think of it like this. If you have $1,000 a year or that you've invested, you get $36 in dividends in that year. That is passive income. You don't actually have to do anything. You don't need to sign any papers. You don't need to look for anything. What you'll notice is in your brokerage account, you'll just see that money deposited as cash. Now, why do companies do this? Remember, when you own a company, a stock of a company is ownership in that company. You're probably not going to have enough money or stocks to make decisions in this company because you're growing your portfolio, of course, and you're listening to this channel. However, because you own a certain amount of that stock, they're going to be paying you a dividend. And this dividend is very, very important, and it grows very fast. Now, I know $36 on $1,000 does not seem amazing, but guys, this can be reinvested. It's free money for you to reinvest. Now, in day trading, a lot of people lose, 90% of people lose $3,000 to $30,000 a year. In real estate, it's also very passive where money grows, and then it's not passive because you actually have to get rental income. And if somebody doesn't pay, somebody doesn't do this. And guess what? Rentals also need repairs. But in dividends, you need none of that. You don't need to repair anything. You don't need to do anything. You just sit there and see the cash deposited. Now, we're going to go into what are the benefits of actual dividend investing. So I already went over a few benefits, but more benefits. And the big benefits are like this. If you're getting an extra $36 a month, a year from your $1,000 investment to SCHD, for example, you can reinvest those dividends, which means you have an extra $36 a year that reinvests into it. And I know that doesn't seem a lot, but over the course of 30 years, it is quite drastic. Look at this chart that shows you investing with compounding and reinvesting your dividends versus investing without reinvesting your dividends. This means you're just taking the money as cash. Now, this doesn't mean that you can't reinvest later or you can't reinvest today and then take out the cash later. Like, for example, you can just keep building up your portfolio, and in 20 years, you can decide, hey, I have a pretty big stockpile. I'm making a couple $1,000s a year from dividends. So I may as well just now invest that money into my pocket because I have other investments or other opportunities that I'm looking for. And also, the main really big portion and the reason why I love dividends is because dividends are even more, how can I say this in a word that you guys are going to understand? Risk averted is a very good way that I like to describe this, because dividend companies, because you can see dividend kings, these are companies that have paid for 25 years plus and have consistently raised their dividend every single year, which means this year you made 36, next year you're going to make 40, year after that 44. So companies like this have an incentive to continue to grow their dividend and pay it out. And think of it like this, guys. Tesla had a fall that fell 14% last week, and Tesla doesn't pay a dividend. Now, obviously, if you're just a growth investor, it kind of is a little suspicious activity. But of course, if you're a smart investor, you're going to buy this dip. But if you had dividends, you don't really give a hoot on if the market is good or bad because you're just waiting on your cash check. So when you invest into companies, you are actually happy that when the companies fall in price and you're still getting paid our dividend because you can just reinvest in that company for even more gain, right? It makes a lot of sense. And in day trading, a lot of people fail. In real estate, tenants can crash your place or just not pay you. And even in my own businesses, you still have to be very active to get this income. But dividends are just a slow roll away. And there's a concept called the snowball effect, which means you keep reinvesting. And I'll show it to you on screen right here. You keep rolling your dividends and you keep compounding your wealth. Now, what is the best plan for you guys in terms if you want to make dividend a good part of your strategy? I always recommend ETFs. And this is what I actually would recommend. I would say have two portfolios. Have one pure ETFs portfolio that you don't touch. This is the S&P 500 index. Just don't touch it. Just leave it on the side. Leave it staying there and keep investing. But any excess amounts of money you have, throw it into your dividends investing. Throw it into starting to build up your dividend portfolio into your single stocks that you do like. It's obviously going to be a lot more riskier. However, you can look at good stocks, and a couple of them are MO. A couple of them are also Reality Income. MO produces the Marlboro cigarettes, and Reality Income is a REIT. REITs are separate types of businesses, and this is actually one of the biggest REITs in the entire world and holds so much property with a 99% accuracy for being occupied. That is amazing, and that's great for growth. So you got to remember this stuff, guys. And now, just remember one really important thing. Look at my portfolio. I own a lot of Reality Income, so this is stuff that I really like, and I'm just making right under $30,000 a year right now in dividends, and none of this money is actually going to my pocket. It's all getting reinvested into Snowfall, and a lot of brokerages have a option where you can just continue to reinvest. So it'll ask you the question, do you want to reinvest? And you're just going to say yes, and then you avoid having to pay any extra commissions. It'll just keep reinvesting once you're able to buy another share, and that's why this portfolio just continues to grow like a monster. Now, another really good strategy you guys can do is you can have no dividend stocks at all. You can just continue to put all your money into ETFs, allow your ETFs to grow by the average of 11% per year in the S&P 500, and then in 20 years, 30 years, you can just fully take it out. As long as you're in like a anti-tax account, right? So as long as you're in a tax-preferred account, and then you can just use that money to invest into dividend stocks. But I don't like that strategy necessarily, just because of the fact is, if you are not familiar with the companies, it's a little harder to, drop in millions of dollars and then figure out where you're going to put the place, rather than have a portfolio that's made that you can just consistently now invest into even more and more and more. And that's the way I think you should do it, guys. So hope you guys took something from this. You guys learned a little bit about this. And yeah, again, if you have any questions, let me know. And we hope to see you here next time, guys. Bye-bye.
Could have been bad. That was close.